Most traders think trends are straight lines. They're not. Trends are made of smaller trends moving inside bigger ones. And if you don't understand this, every retracement feels like a reversal. In this lesson, I'm going to show you how the daily trend controls direction, the 4-hour trend moves inside the daily, and why 4-hour chocks are often just daily pullbacks, not reversals. This alone will stop you from shorting bullish markets and buying tops. Let's start with the daily. The daily, as shown here, the daily is making higher highs and higher lows, telling us that it's an uptrend. Then the macro trend is bullish if the daily is making higher highs and higher lows, because it's an uptrend. That doesn't mean price goes straight up. It means pullbacks are to be expected. So when a high gets taken on the daily, we normally expect a pullback. A trend cannot continue without retracements. So now this is how 4-hour moves within the daily trend. Inside the bullish daily trend, the 4-hour will push higher, then break structure, then temporarily turn bearish, showing us that the daily is having a pullback. As the daily goes higher and takes out a high, when you drop down to the lower time frames, for in this instance is the 4-hour, price on the 4-hour normally takes out a low, which is a chock, breaks down, comes up retracement, and starts making lower lows on the 4-hourly, which is the overall retracement on the daily. As the 4-hour makes lower lows, which is the daily retracement, the overall trend on the daily is bullish. So we would be sat here waiting for the 4-hour to turn bullish with a chock. Takes out a high on the 4-hour, price retraced, and then the 4-hour starts making higher highs from that point onwards, which is then the continuation of the daily trend, which is bullish. Lower time frame bearish structure inside a higher time frame bullish trend is usually just a retracement, not a trend change. So during the daily pullback, the 4-hour starts making lower lows, like seen here, makes lower lows within the daily bullish uptrend, which is just the retracement on the daily. The 4-hour starts making lower lows, the bearish chocks appear as shown here when the chock happens on the 4-hour, showcasing that there is a reversal on the lower time frames, which is the retracement on the daily. Momentum shifts temporarily, and unfortunately this is where impatient traders flip bias and lose money. A retracement will often look like a full trend reversal on lower time frames, but sometimes you need to zoom out and look at what the daily's doing in the grand scheme of things. Once you see this, guys, you won't be able to unsee this. As we know, the daily's bullish. Price is here, for example, and we're swing traders and investors looking to get good entries. So the moment I see a chock on the 4-hour, and I know on the daily we are here, I know there's going to be a continuation at some point, because I know the daily is bullish. So the moment I see a chock or a high taken on the 4-hour here, I'm going to start preparing myself in order to enter a trade. And price is fractal, guys, so whatever I teach, it happens on every single time frame, no matter if it's the 1 minute, 5 minute, 10 minute, 15 minute, 1 hour. Price works the same on all time frames. So yeah, anyway, so when the high gets taken out on the 4-hour and we're in the daily uptrend, I'm getting ready to start buying on a retracement of the 4-hourly. Then the 4-hourly chocks and starts making higher highs from this point onwards, showing us that the daily trend is then continuing. I'm not gonna get too deep into this, guys, as I'll I'm not going to get too deep into this, guys, because I'll add other time frames and stuff later on down the line. I just want to keep it simple for now and only introduce one time frame. So the daily bullish. So first things first, you check if the daily is bullish. We know the daily is bullish because it's making higher highs and higher lows. You need to figure out where we are within the grand scheme of things. So you need to figure out where we are on the daily. So are we here with price still going up on the daily? Which means, yeah, we're expecting a retracement, but we can still take longs until the trend on the lower time frames changes and then comes in for the retracement on the daily. Or are we here? So on the 4 hour, price is coming down and we're waiting for then the 4 hour to chock for our buy positions for a continuation of the daily trend. Does that make sense, guys? So that's where you need to figure out. So you look at the daily and you need to figure out where you are. So daily's bullish, we're in an uptrend. The 4 hours bullish, that's a continuation. So you can keep taking longs until the 4 hour chocks. And if you can't remember what a chock is, guys, this is a chock. Is when the first when the first high low gets taken out, that's a chock. And let me show you that. Give you a real example. So that would be a chock when the first high low gets taken. Okay, so it goes like this. Daily's bullish, trends up. The 4 hours bullish, that's a continuation phase, so you'll keep taking longs. The 4 hour is bearish, meaning 4 hours going down, making a chock and then making lower lows, which is the daily retracement, which is this part here. Four-hour lower lows is the pullback is in progress. So here it's making lower lows on the 4 hourly. And then you get the bullish chock, which is shown there, which is the continuation of the daily, which is the daily trend resumes. Then the 4 hour makes higher highs, which is the continuation of the daily trend. And this cycle repeats over and over in every market. What this stops you from doing is this framework stops you from shorting pullbacks, buying into exhaustion, flipping bias every candle, over trading lower time frames. So let me show you some examples in the charts. So we know here, for example, that price is going up, making higher highs as shown here. So let's say we are here. We're here and we're expecting a pullback. So we drop into the 4 hour chart. So this is the exact point where we was, and you can see the 4 hour starts making lower lows, which is showing to continue, which is showing the pullback, on the daily, and then you get the chock here, and then price makes a higher high or fails to make a higher high, but this was the top of the market, and price ended up making lower lows from this point onwards. But Bitcoin's a better example because it wasn't going sideways for months. So here, price is making higher highs, higher highs, higher highs, higher highs. And let's say we're here and we're looking for the 4-hour pullback, or we're expecting it, let's say. So then we drop down to the lower time frames. So the daily high has been taken, which is indicated, which you can see by this line here. This is the daily high being taken. So we know a pullback is going to come. So the 4 hours making higher highs. This is the low. The low got taken on the 4 hour, which is the chock. And then look what happens here, guys. Look, this was the pullback on the daily. And then price starts making lower lows from this point onwards. But yeah, if you have any questions, please do not hesitate to ask in the comments, and I will try and clear up anything that is misunderstood. Also, if you don't mind giving me a like and a subscribe, that would mean the world to me. Thank you.